Hey, what's going on, guys? My name is Richard Moglen, and welcome to another stock market outlook video. So last Thursday, we did have a fall through day on the SPX, the S&P 500, and it finished up 2.28% with trading volume greater than the previous day. And that fulfills all the requirements for a fall through day, but in my opinion, it didn't really feel like one, and the character didn't seem right. And it didn't really seem like an inflection point had been reached, and now we're going to rocket up and challenge the highs of early 2020. And one of the reasons for that was that the leaders that had been doing well, DocuSign, Zoom, GSX, on that day, and let's take a look at DocuSign. They did pretty poorly. DocuSign was down 8.74%. Zoom was down a further 11%. And this was due to privacy concerns as well. GSX was down as well. Probably another factor for this was the LK fiasco, which, if you're not familiar, LK was a promising growth stock, great sales numbers, but it was some faulty accounting from the company that was boosting up those numbers, and it fell hard, down 75% in one day. So because that's a Chinese stock, that probably dropped faith in GSX. But getting back to the point, a lot of the leaders aren't acting well still, and there aren't a lot of promising setups. And going back to the SPX, on a follow-through day, you want to be looking and having to choose between 50, 100 setups of promising growth stocks that are all breaking out at the same time. That's what it was like on December 2018, and really on this day, there were no promising growth setups. So that's kind of why, for me, it didn't feel like a true fall through day. Could we retest the lows? I think absolutely. And Alpha Charts, or Jack, actually posted a great video talking about what he's looking to see, and I'll link that above right now. But if you want to see kind of his predictions, go ahead and check that video out. It's highly recommended. But overall, we finished down for the week, and let's take a look at a weekly chart. And overall, we were down another 2%, which relative to the fall previously wasn't much at all, but we could be prepping for kind of another wave down. And on that fall through day, we actually had a bearish stochastic cross. So a green dot is a cross of the red over the blue, indicating an oversold condition, and the opposite happened on that Thursday with the red crossing below the blue. So the momentum for me is downwards, and if you take a look at the daily guppy chart and just focus on some moving averages, you can see that we're really nowhere near a red, white, blue uptrend. And for me, that's critical. I'm really gonna wait for a clear red, white, blue pattern to emerge before getting aggressive in this market, even though we've had a fall through day. But given that it was a fall through day, I did have to buy something, and I bought RNG, or Ring Central. And it's in a red, white, blue uptrend. It was among the better charts out there. I don't like how V-shaped the kind of cup formation here was, but it was increasing on above average volume, and it was one of the better choices out there. I will be keeping a close eye on this, and I have a tight stop, but overall, this is my only position. And other than that, I am in cash. But getting back to the indexes, let's take a look at the NASDAQ composites. It looks very similar to the S&P 500. However, on that Thursday, volume was slightly lower on the fall through day for the SPY than the previous trading session. So we did not have a fall through day on the NASDAQ composite. And taking a look at it day by day, on Monday we gapped up and finished right near the high of the day, which was a positive. Then we had kind of a stall day on that Tuesday with a slight gap down, an attempt to break back above the high of the previous week, but then a fall with a close below the close of that Monday. And that selling continued on Wednesday with a gap down and a close nearest the bottom of the trading range. And then we had a nice day on Thursday with a close right near the high of the day. And then on Friday, once again, we had some negative price action with overall it finishing down 1.53%. And one positive going forward, and Jack mentioned this in his video, is that the volume recently has actually been lower than during those really volatile times where we're just up 10%, down 11%. So that is one positive. Now, does that mean that we won't have another wave down? Nobody knows. And really, you should have a plan in place for whatever happens. If you're taking on new longs at this time, you should have tight stops, and you should know your risks. But now let's take a look at the IWM. Let's see how the Russell 2000 index is doing. And overall, it is a pretty similar shape to the SPX and the NASDAQ composite. On that Friday, it was down 2.83%, so a little bit more. And overall, this has been kind of the weakest chart out there. And taking a look now at GLD or gold, you can see that it's kind of formed a little cup here. It's consolidating nicely, but on these rallies, the volume is a lot lower. So that's another thing to keep in mind. And in this market, there's really no safe haven. And in my opinion, cash is king. So lastly, let's go on over to the FFTY, which is the Innovator IBD 50 ETF. And this gives a good indication about how growth stocks are performing in this market. And overall, it tracks pretty similar to the S&P 500 and the NASDAQ. And we are still above the lows set in late March, but those could be retested next week. So keep an eye out for that. And now that we've checked out the indexes, let's go on over to the IBD Big Picture article from this past Friday. And overall, they talk about how we are now in a confirmed uptrend due to the fall through day on Thursday. But all the major indexes were down on this past Friday. And the silver lining, as I pointed out, was that Friday's session was on lower volume. So even though we were down, it was down on less volume, which is a slight positive. And they talk about the jobs report, which was weak. And it's pretty amazing, really. It's pretty amazing and sad very much at the same time, all the unemployment numbers coming out. And they talk about how we narrowly avoided a distribution day on that Friday. And also, as I said, how the leaders aren't performing well at this time. You can see leaders down in volume: GSX, Chewy, DocuSign, and GDS. And they also talk about Amazon, Microsoft, Adobe also kind of fighting those moving averages. But they also point out QLYS and ACAM, which are doing pretty well relatively. So that's pretty much what the IBD Big Picture says. And taking a look at the Wishing Well blog, the GMI signal is still red. And he also talks about how the big leaders, DocuSign and Zoom, were down at the end of last week. So overall, we're still in a very risky environment. And going back to the GMMA chart, I think this is the clearest picture, really. We're still not in an uptrend. And this rally could be short-lived. We could retest the lows here, but we could curl up and actually start a new uptrend. So no matter what, you should be ready, have a plan, have a strong watch list in place. And if you don't have one for yourself, make sure you tune back in later today when I'll be posting my updated fall through day watch list. So hit that red subscribe button if you haven't already. And other than that, thanks so much for watching, and I'll see you guys in future videos.